Good afternoon, traders and investors. Welcome to pre-market prep at the close with stock odds. And folks, yesterday never happened. The market never went down. We are right back up here trading at the highs of the session. Let me bring my charts in, and then you see that handsome Mr. Rob Friesen. He'll be joining us here in just 1 minute. But let's pull up the charts, take a look at some of the futures, what they're doing. And folks, that was a rip your face off rally. And I don't know if my entire face is here because part of it got ripped off too. Straight up from the opening bell, we're making new highs of the session as we speak right now, 41.25. A little dip around 1:32 o'clock, but that didn't last long. We're trying to get back half of that move from the all-time high, 42.38 and a quarter, down to that low today at 40.29 and a quarter. That takes us right back at right where we're at, 41 and a quarter. Crude with the Colonial Pipeline back on, not doing so good here, folks. We have the crude oil trading down $2.31 at 63.77. We have gold trading up 480 at 827.60. Silver in the red just by a penny at 27.23 and a half. And Bitcoin tried to rally, couldn't. Now it's down $5,535 at 48,940. Let's bring in Roberto here. Roberto, how you doing today?
Not too bad, thanks.
All right. Well, thanks for joining me here. The first question that I'd like to throw at you
Oh yeah.
here is
What's the setup now? What's
no. The first question is we had some volatility. We had a big down day yesterday, a big up day today. How does that affect your trading strategies? How does it affect your psychology of the market?
I think on average, I think most traders that have been around for a while would find that they, make more money when things move around more, so greater volatility. I mean, if you're new to trading, it can be a problem. I had some, traders start in 2008, 2009, and it wasn't the best time for them to be learning, but it was certainly great earnings for those that had already been in the markets for a number of years. So I think we like volatility, and overall it was a really great trading day. In fact, the last few days with the discount has been tremendous. Some of these, high flying stocks, they're down 30, 40, 50% from their highs. So, it's been quite a trend down. It happens, I mean, things get mispriced and
separation in the market,
yeah.
right, to the extreme degrees. Not everything goes up at the same time, not everything goes down at the same time. Just looking at some of these growth stocks, I see ARKK down another 257, makes a new low of the move, now trading in double digits. Fubo, who had a decent earnings yesterday, that's right back down. So, but the Dow stocks, the value stocks, the S&P stocks, Apple, Microsoft, Amazon,
Well,
Google,
I mean, this
Facebook.
this is the argument, right? We talked about it on one of your Sunday shows. You ask the question, sell in May and go away, and the reality is you can't sell completely. Where are you going to go to get any yield? I mean, where else are you going to put your money? You know, bury it in the backyard, maybe, I guess, and see it to depreciate. But it's rotation, and we saw a lot of Dow components being gobbled up, some value proposition gobbled up, and that only lasts for a certain period of time before they swing back and see a deep discount in some of the the riskier stocks that they want to own. So everything kind of goes in fits and starts, right?
Right. Okay. I gave up my screen share there.
Oh,
So
did you? Okay.
yeah.
Well, one thing I
Yeah,
want to point
folks.
out that we've used for many, 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 many years is you can find it on our dashboard here. So if you see my screen,
We And let's see here. I'm
Dashboards?
waiting it to come across the. I see you.
Yeah, well, it says you are screen sharing, so I'm
Okay, well, let me go
sharing
to.
something.
Okay, let me go to my Zoom and make sure. Yep, there we go.
Oh,
Bingo.
okay.
You're live,
All
Rob.
right. Okay, great. So we have this seasonality dashboard here. So if you click on that, you'll go to the next screen and you'll see a bunch of ETFs and symbols that you can look up. So you can just click there and it'll load from our database of various things. But what I wanted to point out for you today was just how important the backdrop of the market is related to the different events throughout the month. So let's go to May and let's look at how the spider, which is in blue, and the IWM, which is in black, how they perform mid-month seasonality. Okay, so the beginning of the month and the middle of the month are when you get payroll deposits, 401k money, all kinds of stuff, pension funds going into the market. And it causes this rise. Now, this is quite a bit for the any given month to see that kind of return.
Can I throw one thing at you, Rob? With is it, are the statistics going to be off at all with the tax day being posted?
that's a really good point, and it is possible that they're off a little bit. But here's the thing: when we see what has historically happened, and we see this kind of balloon in the middle of a month, for example, we're going to be looking for a discount prior to that. Well, what did we get? See, today's the first day of seasonality, the 9th business day of the month. So 9th, 10th, 11th, and 12th is it's 3 to 4 days roughly in the middle of the month where you get this little, bonus. Okay. So you want a discount right in front of it. What do we get?
Got the
So, I mean,
discount, got the sell off.
and the thing was, you didn't even have to carry it overnight if you wanted. We kind of opened at a reasonable spot related to the discount of the last 3 days. So what happened? We've been up since this opened. So in fact, we set a low in the overnight session, and we came back off that and proceeded to do pretty well through the open and on up from there. And so you can use this to your advantage. If you want to use the ETFs, that's great. If you want to do a bunch of stocks and have the ETF standing by as a hedge, you can do that. There was plenty of stuff that got a fire sale the last 3 days. So if you want any of that stuff, you can use a seasonal event like this to capitalize on that. I need to mention that we've got a specific course on this coming out on Monday. So if anyone wants to grab it, you can either get it through a membership, or you can just purchase a la carte. It'll be just a small amount, like $49 for a la carte, to get a course all related to how to use all of the seasonalities related to the dashboard. So there's a lot in here. It even gives you, what's happening around the world in the middle of the month, mid-month seasonality, what countries are on fire. Not every country in the world always participates, but overall, it does play out pretty well. So you can go to the month of June, you can look ahead and say, okay, well, Canada's, what's happened to Canada in June? You can go to the first trading day of the month. What does the June 1st look like? Pretty good. Let's roll back to this and look at the first trading day in June. What do we see? First trading day of the month, up. First Friday of the month, up. Mid-month seasonality up, but not as strong as the May one. Third Friday, expiration, Russell rebalancing coming up, all that stuff in June, looking like a bit softer around that point in time. So it really gives you insights. It gives you a great
how many
backdrop.
different countries do you have it? Those statistics for?
Well, we have a global database. You can get all kinds of countries in Europe and Oceania, Asia. So it's global. If you want to trade globally, you certainly can. I
All
mean, our
right.
audience largely is US based in Canada, but like we're getting a lot more interest from traders around the world for bright trading, for example. You know, just brought on some from Italy and Dubai, and we're getting people from all over. So, you know, some of them are interested in trading global data, and some aren't, but it's a great opportunity. One day, you know what we're going to have, Joel? It'll probably just be one great big supermarket where you buy stocks no matter what, right?
Right, around the clock too. For your strategies, Rob, are they open to close? Are you putting stuff on in the pre-market, after hours? Are you always exiting on the close? How does it work as far as the mechanics go?
So you can curate some lists, you know, the probability-based lists that you want to trade. And you could either do if-then statements to say, you know, if they make a new high, I'm interested. If they make a new low, I'm interested. You can do it pre-market if you want to fish around for things that look like they're on sale. You could do it at the open, which is the open and close are really liquid events. And you know, HFT, high frequency, is not participating in them. So it's, you
How
know,
come?
a matter of slippage. It's, you know, you don't have to compete that way.
Why do you
So
think the
that,
HFTs don't compete on the open and the close as much?
well, I mean, because the fact is that most of the algorithms associated to that are looking for, you know, volume weighted average price, time weighted average price, you know, how the bids and offers are stacked, you know, what's coming in what period of time, what's the pace, what's the tempo, what's the bid ask spread. There's all kinds of things going on which are happening all through the day, you know, but at the open and close, it's an auction market, right? It's a batched print. So you can't play, like you can't sit in front of the offer and then sit in front of the bid. Like you're going to get executed as a batch, right? So there's no room for HFT to be playing within a split second in front of the offer, in front of the bid, right?
Right.
It's just a batched order. So if you want to avoid some of that slippage that you get during other sessions, that's one way to do it. Some people trade overnight and then take it off at the open. Some
I
people
know that's
trade
like what
pre-market.
Dennis likes to do. He likes
Yeah,
to
trade
trade the after
pre-market, take it
hours.
off at the open, trade after hours, you know, be flat. There's so many different time frames, but what's the common theme is you have to be data driven. I don't get this, Joel. This bothers me all the time. I don't get the scalability of one-off trading where you sit there all day waiting for your setup and you might miss it by a penny, right? You said waited all day and you missed it by a penny. Okay, well, I guess that day's wasted. Why can't you touch, you know, 10 symbols? Why can't you touch 20? Why can't you touch 50 symbols in a day? And why can't you do it with a data-driven perspective? Right?
Yeah, you're not
I
putting
mean,
all
isn't
your
that isn't
eggs
that
in one
scalable?
basket, right? You're
Yeah.
trading diversified. You're explain your long, your short exposure. Do you like pick and choose which days you're going to be a little bit more longer or a little
Well, I
bit
mean, like
shorter?
today, you know, there's lots of symbols on sale, for example, and you can hedge with the spider. You could hedge with the Dow if you wanted. You could hedge with the Russell if you want to play that game. I mean, you got to think about your volatilities and your betas to some degree, and a lot of times you can actually take advantage of a beta play, which is stuff that is a, you know, high beta that's been oversold, let's say, still can go down, but
That's a
you want
dangerous term,
to,
isn't it? Oversold and
it
overbought.
is, it
Yep.
is absolutely. Now, here's the thing, you know, in our data, we can say, okay, every time that it's hit this RSI value in the past of say 15, you know, really quite oversold, on average, it has done this afterwards. And so you can take that, look at, you know, curating a number of good names, you know, you can choose the risk exposure that you want, and then you can hedge it either with corresponding symbols that have the probability of underperforming, and or you could use an ETF if you want, right? And then you can take it off at the close if you're so inclined, or if it hits price targets during the day, you're welcome to do that. So there's many different styles. The key thing is this. I've worked with traders, for 23 years in a professional capacity, and every one of the consistent performers through all of the years, right? Not just at Bright, but in other firms that I've had the privilege of working with people. The consistent performers are hedgers. I'd like you to bring Bob Bright on here and have him talk to you about the value of hedging, what he sees. Let's invite him on the show here, because the hedging, there's no comparison. And in fact, even if you're completely hedged, you'll make a lot more money on the down days than you will on the up days usually. But with sideways, no problem. Up, down, doesn't really matter what the market does, because you can take a lot of that out of the equation altogether.
Do a lot of hedge trading.
Yeah, Bob's totally hedged all the time and has been throughout his career. But that's a consistent theme. It's not the consistent that this person and that person do the same thing. We might have 10 traders that are all doing different things, different styles, different time frames, whatever. But there's one common thing, and that is they try to de-risk it by taking the market out of it as much as possible. So the hedging component is definitely a big part of it. And every trader that would deviate from that, I talked to one today that once in a while deviates from it. It always costs them money when they sort of decide that they're shifting from a hedge perspective to I'm going to be one-sided. For some reason, it just never seems to work. So my point is, if you have probability-based longs and probability-based shorts, and you put them together, right, then you can benefit from the relative change in performance between the two of them. Doesn't matter if the market goes up, doesn't matter if the market goes down, doesn't matter if it stays sideways.
Right? Are you using stops on these orders, or because you have a hedge position, hedge portfolio on, you're pretty much taking them off at the end of the
people
day?
could get away from stops more than they are. Like I find through my career, I find that if you use a stop in the market, for some reason, it always seems to get stopped out. And no sooner have you gotten stopped out that it would have gone in your favor. You would have been better off not stopping out. Quite often, probably the place to stop where you think you should stop out is probably where you should add. One thing that Bob's always done is sort of benefit from the price discovery aspect. Do you know what I mean by price discovery?
I do, but why don't you explain
when something is breaking a support level that everybody's leaning on, everybody seems to find these. They do vertical bar analysis. They do their moving averages. They do all kinds of things. They find these support levels, and they think, okay, well, I'm going to lean on this. I'm safe to buy it here. Or I can buy it at this price or just in front of it. And it's probably one of the worst things that you can get in a habit of doing, especially if you're leveraged, because it seems that the stops below that just for some reason magically get run. And then there's this price discovery below it. And then it slingshots back, and everybody's fallen out of the tree. It slingshots back, and then it goes up from there, right? And then people have to then scramble and chase it to get their positions back on, or now they're more afraid and stuff like that. So what he does is he purposely puts orders below some of those levels to catch all of that price discovery, to catch all the stop losses that would get run off those levels. Because to be honest, those levels get broken far more than people realize. So, making all of your decisions around a chart perspective and using stops based on the visuals of a chart perspective is not necessarily a compoundable, career-driven approach. If you want a career-driven approach, I recommend data-driven trading, long, short, hedging, use seasonality, use all kinds of indicators. But here's the thing, I don't care that an RSI is at 85. I want to know that every time it was at 85,
What it
what
does.
happened afterwards from a
Quick
probability
question here coming from Roger Milley. What do you mean relative change? If you're fully hedged, then relative is not zero. Do you understand where he's coming from on that?
Absolutely. So here's, you can take a correlated instrument that's 100% correlated, and yeah, your comment would be true, right? If they're 100% correlated, then theoretically, right, it should be that they go up exactly at the same time. So let's take it like this. If I had, let's see, how do I get that thing there? So if I have my longs and they do this, they go up, and I'm short, if I was 100% correlated, then it should go up the same. But you're not going to find that. You're going to find that, most things that you're going to be trading are not. So if I have high probability longs, and that's my starting point here, let's say at the open, and here's my
What do you
finishing
consider
point.
high probability, Rob? Over what percentage? How much over 50%?
Well, I mean, 50-50 is, a crapshoot, let's say.
Right.
But I mean, you can do pretty well at 52-48. People don't realize how scalable things are. Oh, my drawing's not showing up. So hold on a second.
I think you got to stop that the screen share and do a new one.
Okay.
Meanwhile, S&Ps, just real quick, when Rob's doing that, we stuck up to 2675, backed off 10 handles. Really large range day. I mean, we have seen some large ranges on the downside, but almost 100-point range in the SPOOs here. You got that squared away, Rob?
Can you see it now?
Yeah, there
Okay.
you go, sir.
Okay, so if you're starting at the open or whatever, maybe pre-market or after the market, but you're putting some longs on against your shorts, this is what you want to see. So if I had high probability longs that were selected from a data-driven perspective against high probability shorts, meaning they should underperform, then I would expect this relative change. And in this difference here, over this duration of time, let's say that's open to close, then I would make money from that separation. So my longs went up more than my shorts. Or if this was a down market, the longs went down less than the shorts. Or if it's a sideways choppy market, again, they separate slightly. And so the degree by which you get this separation, we call it return on capital. So many of our strategies and indicators that we have in our database are, a benchmark of say 0.1% return on capital. But I encourage people to find out how to, improve over that. I just had one guy report to me that he's discovered a strategy that he's starting to use, which will, he'll keep it to himself, but he's starting to use it from StockOdds, and he's running at 0.38 percent return on capital on average. That includes all winners and all losers. That's really high. I think it'll probably be mean reverting at some point to some degree, but anytime you can get a positive return on capital per day on average after all winners and losers, guess what you have, Joel?
What do you have?
You have a career.
Okay. All right. And all right, we're heading 5 minutes into the close here of the regular session. Is anything else on your screenshots here that you would like to on your screen you'd like to share? Or else I could.
Yeah, let's look at this because this is really important. I sent you that. I don't know if you showed it, but I sent you something on some of the commodities and how much they'd gone up, right? And I said, the Fed has mentioned the word transient for inflation.
Right.
We've had, I think you were saying Dennis was complaining about the lumber prices for his house or something.
Oh, yeah. Well,
right?
Dennis always complains, but
so he's always complaining about something. But anyway, we've had a massive rise. If we were to show this on a monthly basis here, you could see how much, corn has gone up, soybean oil, things like that. And so what we're seeing here is things have gotten very, very expensive. And the question is, do we trust the Fed that it's transient, or are they going to be behind the curve and have to play catch up? So the market's trying to figure that out right now. And this is really important, this transition between how displaced some of these things. These are monthly charts. Look at that. Canola, lumber, soybean, corn, right? And also during this time, the US dollar has, been coming off its highs and been declining. And some of the commodity rich countries like Canada and Australia, their dollar has been climbing because their dollar really gets bid up when they're commodity rich like that. But I just want people to keep tabs on this inflection point that we're on after such a massive rise in the price of so many commodities. Is it going to continue, or are we at the point where it's starting to reverse? So think about how that plays into some of these commodity-based stocks that you guys are involved in.
Yeah,
right?
definitely keep an eye
Okay.
on those.
And
All
then
right.
the other thing is, I really think that we have the potential here of the roaring 20s again.
Yeah, Bob mentioned that
You've
when he
heard
was
that.
on. Yep.
Yeah, you've heard that brought up, right? But but we have that potential. But we're in this critical phase in the month of May, which is never an easy month for a lot of people to trade, because you're coming after earnings, and then you got this transition between, April's earnings and then the Russell rebalancing coming up in June. You've got, you usually have a commodity issue around this time of year. Remember last year we had oil go negative. There's
That was great.
often
That's
been
right.
events.
That's
There's
right.
often been commodity related events in May and June. So it's not an easy time to trade. I've seen a lot of people have challenges, but keep yourself informed, right? Keep your eyes on some of these commodity reversals, and keep your eyes on the fact that there's nowhere else to go to get yield and to get return other than, in assets like the stock market. So I think that you got to prepare for
All scenarios.
but the roaring 20s could definitely be one of them.
All right, Rob, you release your screen here, and I'm going to share my screen.
I will release this to you.
Release. All right, we are Rob. You can stick around. I'm just gonna go over a few stocks. We do have some earnings coming into the close, and just real quickly, S&Ps are losing some altitude here. A little nervousness. Really choppy session. We got up to 26.75, and we just lost a quick 23 handles. So smooth day, but not a super smooth day here. Coinbase, I'm looking at this. We had talked about perhaps trying to buy the dip on this one. Let me bring up my chart and share my screen so you can see exactly what I'm talking about here. With so many windows open. Come on, Zoom. Where are you? I see Rob there in the corner. All right. I'm going to show my screen there, and Coinbase, holy mackerel. No one wants to be long going into the report. We had just touched the low. It's all-time low after that, giving back a lot yesterday. Perhaps attribute the sell-off in Bitcoin to that. That's going to be following Bitcoin very closely. If you guys see an earnings report here, I'm not going to be looking for the actual reports, but what I'm going to do is I'm going to try and look at the price action for you. And Coinbase better have a good report here, because a lot of people are stuck if they didn't exit after that 3-day mini rally that got nowhere near 50%. I know the House of Mouse is due to report today. Didn't really participate much in the rally at all. A little bit disappointing here for Disney shareholders. I'm just looking at that big upside gap there. And if you do get a pop here, they're saying did not participate. It participated in the down day and did participate much today. So short-term traders out there, if you're looking for a gap fill, 184.03. Now we know the House of Mouse can do that very quickly. So we got Coinbase, we got the House of Mouse, a Airbnb due to report today. Once again, these IPOs this year have not been performing well. New all-time, nope, not quite a new all-time low, but up, they're hitting it again. We're going in. If you're looking at the all-time low in Airbnb, that comes in at 121.50, currently trading at 1 to 36 down on the session. So any kind of pops on these coin misses, says Bill Big D in their inaugural earning report. Coin misses, but you know what? It's okay. It's holding up. It touched that low from last week, and that low, as I mentioned, 250.51. Have not hit that yet in the pre-market trading. So, or excuse me, the after hours trading. Todd A mentioned Peloton. You know I'm cheering for Peloton. Can't get my wife to sell it, but maybe it's on the rebound here. One of the growth stocks. Good day for that. Getting back over the former low of the move 4 up days in a row. So a little rebound there in a growth stock, Peloton. I can't say that for ARK, ARKK. That dipped under 100 and has yet to rebound to close over 100. What other have? Do we have any other earnings coming out? Bumble had a bad day. Another IPO that's disappointed this year. New all-time low for Bumble here. Has not even sniffed an up month here. Wow, down 676. So way underwater. Let's see here. Airbnb beats on revs. See if it's getting a pop here. Just a quick pop to 142. Do we have anything on the dailies here? 2-day high 144.27. Actually, today's high was 142.33. So there's one area. Be careful, folks. If you're looking for this really to run, which it's not doing, double top at the 144.50 area. So not much for Airbnb here. Rob, are you still with us?
Yeah. Hey,
You got anything you want to throw in?
I emailed Tesla today.
Yes.
I just said, why if you want to be environmentally friendly, why not do Cardano proof of stake? Why the Bitcoin? I mean, now the retraction, but doesn't it make sense if you want to be environmentally friendly, you want proof of stake? So I had to disclose that obviously I'm an owner of Cardano ADA, but
whatever the hell.
Anyway, I put my 2 cents.
Okay.
Actually did email them.
They put the pressure on Tesla today. The Bitcoiners did not like that. He had those negative comments, and boy, all my top tech stocks are green here, but down $19.30 at 570.50. Perhaps we have a date here with the low of the VOOB 539.49. And that was also a monthly low back here. So 540 must hold level. We'll see if it gets down there again. But the street not taking a liking to him bashing Bitcoin. Airbnb, I mean, the booking volume's looking okay, but you know what? No one cares. This thing is just making new lows. So no reference points here at all for this. It's a new stock, and it's done nothing but go down. We'll see. A lot of times your action in the first 15 minutes, obviously that high at 142 seems pretty safe. That was also the high on the daily chart. You can see right here at the 9:30 open.
I think you do have to be a lot more careful trading stuff that doesn't have as much history behind it, right? I mean, it's not going to be as predictable, right?
Nope. All right, I'm gonna cover the house of mouse here, and then we're gonna go and we're gonna wrap up the day here on this turnaround Thursday. Disney with a revenue miss. Got a pop, but not the kind of pop you want to see. We are now down over $8 here. This is interesting here, folks. In the pre-market trading off the 4 a.m. when things were trading down, it got down to 169, and that's a level that we just hit here. So those pre-market traders that were out there at 161 or 169 are out there after hours at 169. Let's see what we got under that. Under that, your next monthly low comes in at 168.03. So there we are, folks. Rob, thanks for joining me here. Hey Ramon, how you doing? Yes, Kathy stocks are hammered once again.
Out to
But
the
we're going to be
woodshed.
doing, yeah, boy, that can't catch a break. We're going to be doing this more with Rob. We do a Sunday night show. We hope you all can join us there. Set up the trading week. Rob has all his statistics, and the hot thing with doing the show here is that what time do you get your data done, Rob?
About 2 hours after the close.
Yeah. So we're going to be looking
on that price action on Disney. Our vault tells us that the expectation for tomorrow is down as well. So yeah, it's not looking good for Disney after this earnings for tomorrow anyway. Okay.
But I'll tell you, we'll look at that 169, as you can see on my charts. I illustrated here that pre-market low 169, and then we hit it after hours. So that little bit of a coincidence. Rob, thank you.
Okay.
We're going to be doing a lot more of this. Thank you for the people that joins us. We're going to learn more about statistics instead of picks. That's the direction that we're going to take.
Hey, that's a good slogan you came up with.
Yeah,
there.
and I'm not going to charge you for it. And we're going to build our own brand of traders, and right here on At the Close, Rob Friesen, StockOdds. Thanks for joining me, folks. Have a great evening.
Thanks for having me. All
Back
right.
with you bright and early.
Take it easy.
Friday morning.